Hi and good evening. Welcome all to another webinar. Today we have Mr. Ahmad Ali Khan, Chief Market Strategist at www.ahmadalikhan.com. Today, Ahmad will be taking us through price action setup option selling on how to trade by using price action setup option selling. We will be taking up the questions at the end of the session. So you can put in your questions in the chat box and we will be answering them at the end of the session. So without further delay, over to you, Ahmad.
Good afternoon, everyone. So my name is Ahmad Ali Khan, and as I have been introduced, I am a Chief Market Strategist at ahmadalikhan.com, whereas Nifty Technicals by Ahmad Ali Khan is my app also. So what we'll be doing is, what I'll be sharing with you is, I'll be sharing just two setups. You can use that setup in option buying also, and if you need, you can use that setup in option selling also. Basically, I'm a price action trader. And generally I trade on simple and plain vanilla price action setups. Sometimes I do option selling also on those setups, and sometimes I do option buying or future buying selling also on those setups. So even if you are not able to sell options because of fund crunch, you can use these same setups for option buying also, or even cash stocks also. So when we are talking about what is price action, so basically, price action is a method where a trader makes decision based on actual price action by candle movement. What is price action? Basically, whatever the candle is making. What if I share this with you? This is a chart of Nifty. So these candlesticks, these are five. This is a 5 minutes candlestick setup. So what does these candlesticks represent? Each candlestick is representing a 5 minute movement of price. So these candlesticks, the way they are complementing each other or making a pattern, that is called price action. This movement is called price action. So what we do is we either buy or sell. There are certain setups that will allow you to buy. That means market is trying to go up. There are certain setups that will ask you to sell as market is going down. So if the setup is asking you that, telling you that market from here might move up, you can play it with three things, three instruments. Either you can buy a future, either you can sell a put, or either you can buy a call. These are only three instruments through which you can play that particular move. I'll be sharing you two setups. Either you can use them for option buying, or you can use them for option selling also. Okay. So till now, I hope I am clear with everybody. Is there any question right till now? I hope I am audible.
Yes, you are
Clear.
audible.
Okay, fine. So I'll be sharing two setups. Okay, one thing is very important. Price action patterns keep repeating. Why? The other day I gave an example that suppose I am driving and there is a steep turn, it's raining, and I'm driving on a high speed and there is a steep turn. I did not decrease my speed and I tried to turn without decreasing my speed and my car skid. I met with an accident. So even after 6 months, if I am driving on the same road, it is again raining, but this time I realize that if I will not reduce the speed of my car, it might happen again that I will skid and meet with an accident. I hope you are getting what I'm trying to say. Exactly the same thing happens with price action. So since humans are trading in this market, there is a high probability that if there was a certain setup or the price tried to move down from here, there is a high probability that again, if the price comes at this level, people who are aware of price action, they will realize that there is a high probability the price might again start to fall down from this level. And most of the time this happens. There are certain times when this will not happen and it will break the cycle and move on the reverse direction. But most of the times, if the price has moved up from a certain level, there is a high probability it will again move up from that level. If the price has fallen from a level, there is a high probability that again, if price is trading at that level and there are same scenarios that were earlier, the price might again fall down. So always remember, since humans are trading in this market and humans are creators of habits and emotions, these price action patterns most of the times would try to repeat again and again. So this should be in your mind. The second thing is, always uh, try to look out what kind of candlestick is being formed at a particular setup. So candlestick, what is a candlestick? Candlestick only defines uh, four values. For example, I'm talking about a 5 minutes candlestick. It's 11:05. Okay. And I'm talking about 5 minutes candlestick. So what will happen? At 11:05, when a new candle will form, it will note down four things. The first thing is open price. It will note down the open price. The second thing is it will note down the low price. What is the low of that particular 5 minutes? Then what is the highest level, highest point of that 5 minutes? And at 11:10 or 11:09, 59, or I would say 11:10, whatever you can think of that. 11:10, when the candle will close, what is the closing price? The candlestick will only note these four things: open, low, high, and close. Not five things, not three things, these four things. And sometimes you will see that these candlesticks will be making a setup. You will visibly see that there is a formation on the charts. You will see that there is a formation. Whatever, if I share you this chart, can you see that there is a formation on this chart? All candlesticks are 5 minutes, but you are able to see, if you are watching it for the first time, if anybody is watching it for the first time, he'll see that yes, there is a setup. Price moved down from this level. Again, it tried to move up, took support of this resistance, and again, when it breached this level, went down. We sold in today. This is today's Nifty chart. We sold at 11:50 candle. We sold Nifty, or we bought Nifty puts also. So I hope I'm getting clear. I'm not using very tough language. Okay. So these four things candlestick will note down. Okay. Why is candle green? When the closing price is above the opening price, and when the closing price is below the opening price, the candle is red. This is only significance, that closing price is below open price, the candle will be red. Closing price is above the open price, the candle will be green. That's it. There is no any such thing that other than that, why a candle is green or red. Okay. Now we will be seeing these kind of candles in all our trading. We'll see these kind of candles. See, you don't have to remember the names of every candle. For example, this type of candle is called Maribozu candle. Okay, this is a normal candle. This is called a doji. Many of these candles will be called hammer and whatnot. There are many names. You don't have to remember the name of every candle, what kind of candle this is. You just have to see what is this candle representing. First, this candle shows there are lot of buyers. So this is the most bullish candle. You will see that there are only buyers in this candle. You will see this kind of candle also. There is a long wick. This indicates that price tried to move down, but again it was pushed above by buyers. You will see this kind of candle. That indicates that the price tried to move up, but sellers pushed it down. This kind of candle, this shows that with a small body and too long wick, which this means there is an indecisiveness in market, which means that both buyers and sellers are in control right now, and either side if breached, we might see a good up move. So you will see these kind of candles. A long wick suggests that there is a pressure, either if it is above, the wick is above, then the pressure is from top, and if the wick is below the body, this indicates that there is a buying pressure from below. So if you will see a chart, you will see here. Now, the most important thing is what kind of candle this is, okay, and where the candle is placed. So if you will see around here, this is a very green candle, very bullish candle. But this does not mean that you should go long. This means we are at our CPR support. We should not go long. Candle is good. It is having good buying pressure, but this indicates we should not go long over here. Okay. Now over here, you see this is indecisiveness, and once this level is broken, we can see that prices started moving down. You will see plenty of candles at different levels, but at that particular support or resistance, what kind of candle is information that will define whether you should trade it or not. For example, yesterday there was a indecisiveness in this market, and yesterday when price broke this level, there was selling. I also sold bank nifty calls yesterday. This candle, this shows that price tried to move up and was rejected, and so on. You'll see there are plenty of candles. So you will see which will indicate what the price is trying to do at this particular level. You see this is a doji style candle. That means price is indecisive, and once the high of this candle is broken, one can go long, which means that pressure is out. Now buyers will be in charge. So I hope you are getting what I am trying to say. Always try to see what kind of candle it is and at what point this candle is in formation and what level. Day before yesterday, we saw this candle. There was a CPR breakout. Price tried to move down, and again we went long in this candle because this showed that price tried to move below, took support of this pivot and started moving up. So we went long in this candle at 120 day before yesterday. So always see what kind of candle it is and at what level this candle is making a formation. Now, let's talk about setup. I am sharing two setups. You can use these setups either in option buying or you can use these setups in option selling. If you and yes, all these setups are for made on 5 minutes time frame, plus these setups are for intraday only. Especially if it's near expiry, these setups work very well in option selling. So first setup is red candle retracement, or this is called first red sell also. Another name for this setup is first red sell. In this setup, what happens? The first candle of the day, first 5 minute candle of the day is red. You can see the first 5 minute candle of the day is red. Now, what we do is later in the day, if price tries to move up again, and you will see that around the high of first candle, you see a red candle like this, a rejection candle. That indicates the price is trying to move down again. Now you can play, and that means you can short at this level with the high, and if there is a pivot, you can keep your SL above that pivot or above the high day's high level, and you can short the market or that particular instrument. You can play with three instruments around these levels. Either you can sell future, either you can buy a put, or you can sell a call. So I am repeating again, first red candle of the day, or I should say first candle of the day, which is red. Once it's made, and again later in the day, price moves up, retraces, and again goes to the high of first red candle. And you see this kind of red candle information. You can short the market with the SL of day's high, or if there is a pivot above that pivot, you can keep your SL. And what should be your target? Your target, the first target will be the first red candle swing low. The low of the first candle will be your first target. Later, if this level is broken, the nearest support will be your next target. Okay, I hope I am clear with this. Now I'm showing you some examples. We'll go on Bank Nifty 4th of March. You will see, look at this. Bank Nifty made this setup, again tried to move up, There was a pivot resistance. It took resistance and started moving down. One can short the market around these levels, and the stop loss even over here will be very small as there is a pivot. What you can do is you can put stop loss above this level and short. So the price is 34,450. So above 34,500 or 34,600, you can start selling calls. And you can, if you want to go, you can buy, if you want to buy puts, you can buy 34,400 or 34,500 puts also around these levels, or sell the future. And you see the price moved. The first target was this first candle low. It was achieved, and later once broken, it again started to move down, and we got around, how much points have we got? From 460 to 110. You got around 300 points, I guess 300 points in this single trade. I remember what was the SL, 450, and SL was 560. Just 100 rupees SL, and you got around 300 points. So one could have done, he could have sold calls above these levels, because and if the price, the day is near expiry, the premium shrink will be heavy. And plus these what does these setups indicate? That market might give a good move. So if you are selling options, and you can even sell in the money options also in these setups. In the money option selling can also be done, and if you are able to use your hedging strategies along with this, it works really great. So you can sell around these levels. This is Bank Nifty 4th of March. Then again, you will see Reliance. So what I am using different examples because I am letting you know that these setups works everywhere, not in just Nifty, Bank Nifty. It works everywhere, even in on stocks also. 14th March Reliance. So if you will see 14th March Reliance, look over here. First candle is red. See, price moved above, took resistance. You can see this red candle. You can short the market with high, the stop loss of high. What's the SL? 2388. SL is 2393. Only 5 rupees SL. And you received your target, achieved your target of 10 rupees within minutes. Within next candle, you achieved your target. And later on also, you got around, I guess, 1:3 risk reward in this particular trade. Now the next is SBI. Okay, this is SBI card. Sorry. See, first red candle, price tried to move up, started getting rejection. You can go short. You received all your targets later. First target, first candle low. Next target, nearest support, which is CPR. Again, it fell from the same level. So again, when price moved over here and made a red candle, you could have shorted here with the stop loss of day's high as the first candle high. And since there was a pivot also, you could have used this level as your stop loss. So just 2 rupees SL, and you got 1:4 risk reward ratio over here with just a 2 rupees SL. Now comes Kotak Bank. Just giving one more example. On 10th of March. See, first red candle, price moved, started falling. You could have shorted over here. Your stop loss is above this pivot as there is a pivot. And First target, your first candle low. Second target, nearest support, that which could have been a previous day high also. So I hope I was pretty clear with the setup. Are you able to identify this and are you able to understand what kind of setup this is? I hope I was clear. Uh, this is a very indicator is simple. You can use CPR. This is CPR. You can use CPR by AAK in TradingView, and it's a free indicator. So this allows you to, these pivots allow you to identify where the support or resistance is lying. You can use this indicator. It's free of cost. So it's CPR. These moving averages are 8 and 20. So I use it for a different purpose. So it does not matter if you are using this or not. It does not matter with this strategy. So this red one is 8 and this blue one is 20 EMA plus this CPR. So Kotak Bank, as you can see, 10th of March. In fact, 8th of March also, Kotak Bank made same kind of setup. You can see first red candle, retraced and again shorting. You can see first red candle low is your first support. This is the support of your first target. You can see, and once broken, nearest support is your next target. So I hope this setup is pretty clear to everyone. If it is clear, we can move on to the next setup, which is just reverse of this setup. This is green candle retracement or first green buy. Another name for this setup is first green buy. So you can see the first candle of the day, which is green. The first candle of the day, it is green. If the price retraces to its low or near its low, it's just not that it should come near its low, it should be around its low, like it was around first red candle's high also, and it starts making a green candle like this, we can go long. What we can do is we can buy a future, we can buy a call, or we can sell a put of below this levels. A put, the strike price should be below the level of this first candle or the support level. And if there is a support, if there is a pivot, we can keep our stop loss below that level, and our first target will be the high of this candle, high of first candle. Once this is achieved, we can trail our stop loss, and the next resistance will be our target number 2. Again, first candle is green, we retrace to the lows of that candle, and once we see there is a green candle around that and trying to move up, we can go long, keeping our stop loss below the low of the day, or if there is a pivot, below that pivot. First target will be first candle high, and beyond that, nearest resistance will be our first target. Let me see the examples again. I'll start with Bank Nifty. See, Bank Nifty 14th March. You can see first candle low. This is the low of first candle. We retraced. There was a 20 EMA support also. And once we tried to move up, we can go long. First target, first candle high, or there was a pivot also nearby. And later on, if you will see, we just keep riding the trend. Keep trailing our stop loss. You can see first green candle, we retraced, came to the low of first green candle and started moving up. We can go long, keeping our stop loss just below this support level. Nearest target, nearest resistance, or first candle high, and further. 22nd March, we will see Tata Steel. You can see 22nd March, Tata Steel, first candle low. We can see Tata Steel came around these levels, took support and started moving up. First candle high was your first target. So how much points did you get? You get around 15 to 20, approximately 7 points, 0.05% in this 0.5%. in this particular trade of the stock. You can see GCR. Next is 17th of March also in Tata Steel. You can see first green candle high, price came down, took support and started moving up. First green candle high was your target. Later in the day also again price came to these levels and started moving up. We can again go long around these levels and you can see what a great move Tata Steel gave. I guess we were in, somebody asked me the other day on 17th of March, I guess we had bought Tata Steel. I don't trade in stocks generally, but this was something that I suggested that one can go long and keep following ATMA. Now 17th of March, we can see SBI also. You can see first green candle low. We can see there is a green candle in making. We can go long, just keeping SL just below this level. 499, 498. Just 1 rupees stop loss. And how much did we get? Around 1:2 as a first target, and later 1:3 also as second target in SBI. So I am using stocks also as an example because I just want to make it sure that these strategies, these setups works everywhere. Many of my associates are trading in forex also or in crypto also, and they are using these setups for option selling also. So once price is at these level, what we can do is we can short puts of lower levels. We can short puts of lower levels, and if the price keeps moving in trending direction, we can keep shorting the puts of lower levels. One more example and I'll be done with these setups. Infosys, which is on 15th of February. You can see first green candle low, price came towards it, took CPR support and 20 EMA support. We can go long, and you can see around 10 rupees in this particular trade. And once the high was broken, we kept moving higher and higher. What an amazing rally this was. So just a stop loss of, I guess, 5 or 6 rupees, we grabbed around the rally was of for, I guess, 40 points rally. So I hope I am clear with the setups. Is anybody not able to see my screen right now? Is my screen visible to everyone?
Ahmad, it's visible.
Okay. So I guess I have shared both the strategies. There were two strategies. If there is any query, I'm all yours. Please ask.
So, Ahmad, there are two questions that we have. So one is from Sonu Singh Saluja. He asked, "Hi sir, which CPR is that, and how to plot CPR, and which another indicator are placed?" So he wants you to explain that, Ahmed.
Okay, so no, the thing is, I have this is a CPR that has been programmed, or you can say coded in my name, CPR by AAK Ahmad Ali Khan. You can search in the indicator section of tradingview.com. Then this is a page of tradingview.com, so you can go and search CPR by AAK. And how to plot this CPR? Well, if you can just search my YouTube channel. It's Ahmad Ali Khan Nifty Technicals, my YouTube channel, and you will see how there is a video how to plot CPR in TradingView. The other indicator is 8 and 20 EMA, which has been integrated in this CPR only. If you will go into the settings, you will see there's in inputs, you will see select exponential moving average. I have got this integrated in this only. So I use 8 and 20 period exponential moving average. You can use this. So even if you want to use, for example, 50 and 100 period exponential moving averages, so you can just change it over here and you will see the difference. Moving averages are here only. And if you want to use them as 8 and 20 only, you can use them as 8 and 20. It's free of cost. Available in tradingview.com. But yes, if you are using 3 indicators, so you will have to just remove one indicator, and then you can use this CPR. So in one indicator, I have covered all the things, CPR, pivot levels, and moving averages. I hope I'm clear.
Thank you, Ahmed. The next question that we have is, which type of indicator do we have to add in charts? Please suggest.
See, I'm not a very indicator friendly person. Basically, I always say go for price action. I only use CPR or pivot levels because these levels just give me an idea where support or resistance might lie. That's it. You won't see that there are many indicators on my chart. Yes, you will be seeing 8 and 20 EMA. This is for breakout, and if I want to ride a runner, that means if market is trending and I am in good profits, I'll keep trailing my stop losses unless these moving averages are broken and price starts to trade below these levels continuously. Then I'll exit, or else I'll hold my winning trade till the end. So I only use this setups. Yes, the other thing you are seeing here is the volume, which I only use just uh, so that when I be using volume, I'll get this drop down over here, so I can hide the indicator. So I don't use any other indicator. But yes, there are plenty of indicators which you can use. But obviously, I would not be the right person to tell you because I myself am not using those indicators. So what I'm using is that only I can tell you. But the main thing is, whatever indicator you are using, unless and until you are uh, good at price action or you are able to identify the price action setups, indicators won't help you. So trading should not be done on the with the help of indicators. Indicators are there to give you an extra leverage, but you should not trade on basis of indicators. So just that the RSI is showing that it is oversold or overbought, but the price action is not suggesting something like that. So you should not take trades as per RSI. You should see that price action is also complementing what RSI wants to say. Then only your trade will be high probability. I hope I'm clear.
Thank you, Ahmed. The next question is from Mr. Firoz. He asks us, will this same strategy work on different time frames like in 15 or 30 minutes?
See, I only use these time frames, this on 5 minutes time frame. So Infosys is, this is a 5 minutes time frame. If I'll go on a 15 minutes time frame, the support and resistance levels changes. So what I always suggest is for these strategies, you should use 5 minutes time frame only, because once you change the time frame, the support and resistance levels also change and candlestick support and resistance levels also change. So it is better if you use 5 minutes for entry and exit. Yes, I also, when I in the morning, if I'll be taking a trade, I'll be marking my charts. I'll be using 5 minutes also, 15 minutes also, 30 minutes, 1 hour and 1 day time frame also to mark the levels. But entry and exit should be done in 5 minutes only. That gives you a better picture, a good entry, and your stop loss is also very convenient.
I believe that answers the question, and we have summed up all the questions that we have. Okay, we have one more question right now, which has come up from Mr. Ankit. He asks us, why are we using moving average on volume?
Moving average on volume. Well, Ankit, the thing is, this is a by default volume. I just explained why I'm using this volume over here. It is just because once, if I'm not using this volume indicator, I won't be getting the option of hiding this CPR, and which looks not very clean. So it is not that I'm using that volume indicator. I just use volume because uh, I, after using that thing, I am getting this drop down with which I can, with the help of, I can hide my indicator and my chart remains clean. That is the main reason. So I don't use volume as any of the indicators. It's just there for hiding the other indicators and keeping the chart clean. So I
Thank
hope
you,
I'm
Ahmed.
clear.
I think you have pretty much explained that part also. Thank you so much, Ahmed, for this interesting session. I am sure that people and the audience have gained a lot out of the last 1 hour. and we would be happy to receive questions if anyone has any questions going ahead. Also, we would be sharing the recordings of the webinars shortly on your registered email ID that you have with Edelweiss. Thank you, audience, for your patience. Thank you for giving us your valuable time. Thank you, Ahmad. Thank you,
We're
Dhananjay.
always happy to share.
Thank you, everyone.